Hello, today we are going to focus on alternative investments. Alternative management has been under the spotlight since 2008, especially with regards to regulation. Is the picture clearer today? What are the perspectives for this type of approach? In our studio today, Fabrice Cuchet, Global Head of Alternative Investments at Dexia Asset Management. Fabrice, hello.
Hello.
More regulation was probably needed for alternative management, but are you satisfied with the new directives?
On one hand, yes, because as you said, we needed more regulation to restore confidence and to enhance transparency. On the other hand, the answer is no, for a couple of reasons. Because the pace at which regulation are set up today is really challenging for asset managers. That's the first reason. And second reason is that good regulation needs stability and visibility. And that's obviously not at all the case today.
Do you have an example for what you are saying?
Yeah, a good example, for instance, is the UCITS framework. So it took 25 years to go from UCITS 1 to UCITS 4. We just implemented UCITS 4 last summer. And now it will take 2 or 3 years to go from UCITS 4 to UCITS 6. Where is the stability?
And at least do those new regulations all go in the same direction?
Yes, they are all targeting to mitigate systemic risk and to enhance investor protection. But it seems to me that sometimes regulators are clearly overreacting to short-term issues rather than focusing on building a stable framework for the long run. And in addition, it seems also to me that some players, like asset managers, are more regulated than other players. Regulation for asset managers is more demanding than for banks, for instance, who are providing similar products to their clients with less constraints.
A lot of things were said about alternative management, too many managers, too many products, mediocre performance. What is your opinion on that matter?
Yeah, that's true that alternative performance are lagging other asset classes in 2012. But why? Mainly because fund managers have done their job. They have reduced risk in a systemic risk environment. And as a result, they didn't capture the upward trends in June and July.
Some people would actually argue the opposite. What would you say to them?
Yeah, many people are saying that alternative is not performing anymore. Performance around 4% versus 8% before the crisis. But they forgot to take into account the fact that interest rates are now close to zero. So in terms of overperformance, it's pretty the same. And so I don't believe that we are facing structural changes. We're just going through a difficult period, difficult environment, where fund managers are doing their work to limit drawdowns.
So at Dexia AM, what are the performances of your funds?
Pretty good performance. We went pretty well through this difficult second quarter of 2012 with a good resilience, as we have always posted in difficult market environment. Two examples. First one is our CTA program, where we are posting our 6th year in a row of positive performance with average return around 8% a year. Second example, for instance, in the long-short credit space, our program is posting a performance above 3% this year, very good track record, and this program is attracting new money with a net new cash around 200 million year to date, for instance.
And looking forward, are you confident about alternative investments in the years to come?
Yeah, I am. I am, despite the fact we are not out of the wood yet of the European crisis. But central banks are here, interest rates are low. And that's two good reasons to look at alternative funds to invest your money in. For instance, institutional investors are adding to their alternative holdings since 2009. And they are clearly fueling the growth of the industry. And I'm very confident it will last for the year to come.
Thank you, Fabrice.
Thank you.
Thank you for your attention. I look forward to seeing you very soon on this channel.